we have to look at what actually drives economic expansion. Consumers are tapped out, demand is creating, stock market's overbought. This is the most important chart of macroeconomics, and I'm pulling this from mishtalk.com. Great analysis, great economist, Eric Basmajian at EPB Macro, breaking down what actually causes economic expansion in this country. Primary things are cyclical demands, the increase and the up and down of the cyclical component of GDP. I'm not asking you to break out a book and start going back to school on economics. Just focus on these two things: housing and durable goods. Housing and durable goods. And if you start to move back to this red line, we've got a problem. That's the point of this chart. Past 15-year effectively average, you move back to that line, this economy's in trouble. Now, housing is going down. People's homes are losing value. The inventory's coming up a little bit, but rent prices continue to get out of hand and be dramatic increases. We had a 0.5% increase in rents. Again, we're probably not done there yet for the rest of the year. And it's so bad right now that advocates for renters are asking the White House to step in and set price controls on rentals. That doesn't end well. Never ends well. So consumer goods and housing, the backside of this. Look at the PMI numbers. You had one good month. You better get a couple more. We're going to see higher durable goods that are not driven by government spending, not driven by supporting the war in Ukraine like we just had the last one. What happens when energy prices potentially move higher because China's coming back online? China is currently shutting down cities for COVID. That's coming back online. Supply in the United States, lowest level since 2008. The United States government has been selling from the Strategic Petroleum Reserve, 1 million barrels per day, which is what Americans use in less than an hour. And moving forward, they're supposed to stop selling that in October. That is messing with the front month contract. Oh, and by the way, what if just aggregate demand increases just a little bit? People go, oh, well, I can afford more than $7 in gas. I can buy 14. Well, you just doubled your demand. And you do that across the entire supply chain. We have less gasoline demand today than we did during the height of COVID. That tells you everything about the state of this economy, and it's screaming recession in my face. So eventually we stop suspending gravity. We watch this market just continue to move higher. Good. Go. Lift my portfolio to 430. Go to 480. I'm great with it. Because the backside of this, if we continue down the path we are heading, particularly on the inflationary side, 8.5% is a lot. It is a lot. And if they make the same mistakes that they made in the 1970s, where they say, okay, well, we're not going to raise rates to the point that they need to, and we're going to ease off a little bit. At the end of this, you get to an inflationary point, particularly with our appeasement, the very expensive appeasement to the climate gods that we will continue to face moving forward. ESG is very expensive. Energy prices, again, not because of supply, wholly because of demand being crushed. If you try to lift demand again, anywhere in this economy, inflation will reappear. And we just passed, $430 billion in new stimulus? There are people right now who are arguing that because of the numbers from Wednesday and Thursday, just a little tiny drop in month over month on inflation, they're arguing that the inflation bill is already working. It hasn't even been signed. I don't even think it's passed the House, has it? I don't know. The point is, this is gearing up to the mother of all shorts. It is coming, because this extension, this long in the tooth extension, keep doing it. And so long as we follow momentum, so long as we follow what the SPY is doing, so long as we can witness in real time what is happening, with capital, inflows and outflows. Money is still screaming into this market. The VIX is going to fell under 20 today for just a little while. Good. Keep going. Keep going. Keep going. Keep going. Don't stop. Let's get up to 75 on the RSI. Let's get up to 80 on the MFI because the numbers don't back it up. And in the meantime, what I get to do and what we get to do at the world's biggest trade, because that's where you find out first what is happening in real time, here's the SPY. And I have been on this network all year long. Called it on the date of the 28th, January 28th, that turnaround. Called it negative. That's when I was traveling. We had this January 13th. That's when I was up in Boone, North Carolina. I was like, I'm going to cash. Bye, everybody. I'm leaving. And I went to cash. I went to cash here, and then I went to cash here in April. Real time, money out of the market. Called it down to the hour. Here's where I was getting a needle in my back because I needed an epidural for my spine, and I sold everything I had on an operating table. Cleared it all out. Started dumping. And here is the reversal, right? Yeah, we missed the June 16th up to this run, but here's where it comes in positive. That July 18th where the SPY, show it to me. Let's show you. It's a piece of cake. SPY. Go back to July 18th, right here. Here's your 50-day moving average cross on the 390, but here is your RSI going over 50. Here's your MFI going over 50. Here is very strong momentum on the MACD. You had a crossover positive on the ADX and the ULT. You got to use all 5 of them. And there's 4 or 5 more that you might want to use as well. You want to look at the ATR. You want to really understand. Look, one indicator is not going to do a damn thing for you. And some people look at this and they go, "This looks like EKGs." Yeah, I'll show you how to read this. It's pretty simple. And this MACD, when this crosses over negatively, this is what we're watching. The MACD on the SPY, the daily. You see a crossover like this at some point soon, you're going to be looking at an April-type sell-off that is going to be monumental. That's it. That's the whole thesis.